There's more to life than just working for 40, 50 years. And I'm doing this for my family, for the time control. I want my time freedom back. And that's why I'm in this.
Welcome back, passive investor. We are going on our next adventure today with Cody Laughlin. Have you ever asked yourself the question of what would you do if you needed to leave your job? That's the question that Cody and I go over today. He and his wife are both registered nurses. And Cody got to the point where he realized he was giving up not only his time, but also his mental health and his physical health, working too many hours as a nurse. And he decided to make a change. Because he's in the healthcare profession, he was able to not just quit cold turkey, he was able to step it down until he's now working part-time at his nursing career, as well as operating nearly 1,000 multifamily units in various areas across the country. Cody lives in Houston, Texas, and walks us through how he got started, how he went through the same issues that we all go through as new landlords and not knowing what we're doing, until his wife finally sat him down and told him that he needed to find some focus. And that gave him the freedom that he needed to be able to start his real estate investing business and work toward his dreams of becoming a passive investor. So buckle up. It's going to be a great ride, especially if you're in the healthcare industry. You're going to want to listen to this one all the way to the end. It has some great tips and tricks. We always try to give you a nice mixture of inspiration as well as motivation through actual techniques of what you can do to get started in investing or scale up if you've already got a few deals under your belt. Thank you for joining us on this passive income adventure, and let's get right to the show. Thank you for being with us today, Cody. We have Cody Laughlin from Houston, Texas, and he is a principal at Blue Oak Capital, specializing in multifamily acquisitions, and he is in the healthcare field as well. So, Cody, thanks for coming. Would love to hear a little bit about your background and just tell us a little bit more about you, how you got started.
Thank you so much for having me, Emma. I'm really excited to be here, really excited to share my story. So appreciate that. My journey started back in 2008 when my wife and I graduated college and migrated from Southwest Louisiana to Houston, Texas. And we bought our very first starter home in 2008. We started our careers. We got married. Like all of these life-changing events happened in like a 2 or 3 month time period in about June, July of 2008. And we thought we were on our journey to pursuing the American dream. And we got our career started in healthcare. I'm a registered nurse. My wife is a registered nurse. And we started our careers in healthcare here in Houston. And after about 2 years, my wife decided, hey, I want to move to a different location in Houston. And if anybody recalls, obviously 2008, 2010, this is just in the wake of the great financial crisis. The housing market was still in the dirt, and it was very difficult to sell real estate at that time. And so we found another home in another part of Houston that we really liked. We went ahead and purchased it, got it under contract, closed it, and we were going to continue to try to sell our first home, but we could not. The dilemma is we were also not in a financial position where we could afford to pay 2 mortgages. And so there was a little bit of panic that started to happen because we were like, man, we're going to go broke very quickly if we don't come up with a solution. And the initial response was, hey, let's put a resident in there. We'll lease it out and then we'll figure it out from there. And that's exactly what we did. We leased it out. And I remember I went to my CPA that year. I think it was 2010, 2011. I was going to file my taxes. And my CPA hands me my return. And I was like, whoa, holy smokes, what is that? We didn't have to pay in and whatnot. And this is what happens when you own investment real estate. And I was just like, this is great. Somebody's living in my home, paying my mortgage, and I get tax benefit. This is awesome. At the time, I was on the path to pursue an advanced degree in healthcare. I wanted to go back, get my master's degree, and go up that corporate ladder. And somebody introduced me to a book called Rich Dad, Poor Dad. And it forever changed my outlook on financial literacy and true financial independence. And I said, man, screw getting a master's degree. I'm going to go and be a real estate entrepreneur and pursue that full time. And so I went on that journey, and I spent about 8 years in residential real estate doing a variety of different strategies. I've pretty much tried everything. I did deviate from real estate for a little while, tried some non-real estate related ventures. And then I finally had this inflection point where I was getting frustrated with the lack of momentum, lack of scale, all the time and effort and resources I was investing into getting a portfolio started, but really wasn't seeing all of the return on that time and effort. And so finally I made the decision to level up into multifamily, which offered the economies of scale, the momentum that I was looking for and such. And that was in 2019. And I've been solely focused on multifamily since. And the beautiful thing about this is I've been doing all of this while being part-time, well, by working full-time up until about a year and a half ago, where I transitioned to part-time in healthcare. Today, my partners and I, we're partners in 847 multifamily units across 4 acquisitions, and then also an industrial warehouse space. I've been able to gain a lot of ground over the last 2-3 years. So
It's interesting how you say this transition that you made from basically we just want to buy another house to becoming one of a accidental landlord. Because a lot of times you hear people tell the stories where they became an accidental landlord and the person just trashed the house. They had to evict them because they wouldn't pay, and they get in there and it's trashy and they have to pay a couple $1,000s to get the thing repainted, new flooring, whatever. But then you have in your case, which was the complete opposite, where they're paying their rent, being decent tenants. And then when you saw the tax benefits from the depreciation later, you thought, wow, this is really where it is. And so, what would you say to that person who's maybe been through a landlording experience and had a house that and it didn't really go that well? They got left maybe high and dry and they had to fix it up or evict something, and they don't want to do this anymore because tenants are just annoying and they trash the house and all of that.
one thing that we didn't highlight is when I was self-managing for the first year and a half, it was going great. Yes, my resident was paying on time and everything was smooth until it wasn't. And then there was a moment of time where, yeah, he did quit paying. And then he did start calling with complaints and concerns and issues. And I remember this was, it may have been 2012, if I recall correctly. It was New Year's week. And I remember he calls me and says, "Hey, I've got to get out of this house now. I don't feel safe anymore." He had a young daughter who was about 8 years old who had disabilities. And he's given me this wild, outlandish story how he was held at gunpoint at the house and all this stuff. Now, I lived in this house before him for 2 years, never had any safety concerns. So, of course, I'm like, wow, this is interesting. So I go meet him at the property and I try to get a little bit more information as to why. And
Didn't
being,
file a police report.
yeah, why he didn't file a police report. Really, I've never heard of safety concerns in this neighborhood. Being the naive, younger manager that I was, I guess you could call it, of course, I felt sorry for him. And I was sensitive to the fact he had a young daughter. And I said, "Hey, look, man, whatever. If you want to go, just clean the place up and then we'll deal with it from there." So he gets out and I go and my wife and I, we actually were the ones to turn it and get it cleaned up, whatever. It was through us cleaning out the home that we figured out he was selling crack cocaine from the house, which is why it led to him getting held at gunpoint and such like that. So that was quite an experience. It cost us some time and effort and money to get that place turned ourselves. And then I rented it out again to a second tenant who paid 1 month's rent. And after that, I never received another check. And then fast forward later, 6 months after going through the eviction process, when we finally got him evicted, I was just so burnt out already in that experience. And here it is, I'm paying 2 mortgages because this guy's living in my house now. I can't get him out. And going through the eviction process was very eye-opening. And it was at that moment of time when we got that second tenant out, I was like, I don't want to do this. Like, I'm not investing in real estate or putting in this time and energy so I can have a second job. I already have a stressful enough job in healthcare. I don't want a second stressful job. And I hired a property manager from that point on, even for my one little single unit. And it was the best decision I ever made because she was the one that was able to manage the tenants, make sure that she was screening the tenants, collecting the checks and whatever, taking care of the deferred maintenance and whatnot, all while I'm sitting there being completely passive. So that was the first big lesson for me is unless you just have an innate desire to be an on-site property manager and you just love that, which some people do, I do not, hire good third-party property managers to manage your properties, and that'll save you a lot of heartache and a lot of time and effort. That would be my first instruction to anybody that's looking to invest in real estate. If you don't have the time and effort or desire to be that hands-on, hire professionals that do.
That is some fantastic advice because people try to do it themselves at the beginning, especially when they're new and they don't know what they're doing. But I think another mistake that people often make, especially when they're new again, is that they will hire a property manager right off the bat, but they don't know how to manage the manager. And I know before we bought our first rental property, we had a contract on a fourplex and we had never had even a single renter, not one tenant ever. And suddenly I was going to get 4 of them in one. And I was really struggling and I started reading some books and doing some more research so that I could could figure out how to be a landlord, because I wanted to hire a property manager, but I also knew that I would need to know how to hire the manager. We ended up not buying that property for financing reasons. But at the same time, I was so relieved when we didn't buy it, because I realized I don't know what I'm doing and how to do this, and being able to just go back and start over from scratch and take my time listening to the books and interviewing various people, property managers and other owners, before we found our next property was a huge relief to me. So how did you end up changing that relationship where you're managing your manager versus having to manage your tenants? Because oftentimes we think, oh, we'll just hire a property manager and it'll be okay. But no, they do need attention and care.
Yeah, no, you're absolutely right. You first off, you need to have a business plan in place, right? You need to have a vision for what is your expectation for this particular piece of real estate. Are you going to buy and hold it for 5, 10 years? Are you going to fix and flip it? Whatever. Like, you need to have a very clear outlined business plan, and that needs to be very transparent to your property manager. The second thing is you need to have a property manager that you trust. So you do need to take your time interviewing that person or that team to make sure that they are going to be accountable to executing the business plan as you see fit for your plan. And then from there, it's just really making sure that you are holding them accountable to make sure they're executing, making sure that you're following up them on a routine basis, whether it be weekly or monthly, making sure that things are going accordingly as you agreed upon. And if they're not, then you need to be able to have the fortitude to make quick decisions on whether or not you need to redirect or either replace them with a new property manager that's going to execute. For me, in my situation, my property manager ended up being the realtor that sold us our first home, sold us our second home, and whatnot. And she also did property management on the side. And so there was already an established relationship there. There was already a level of trust there. And she was a firecracker. She was somebody that she's sweet, but she's also not going to take any BS. So I felt confident in her ability to really manage that. And so we hired her, and it was fantastic. She managed that property for us for 8 years, I think. So
That relationship is really key. And I think sometimes business people tend to overcomplicate things so that a beginner feels like they can't do it, because they'll hear a word like set up some KPIs, stands for key performance indicator, or set up your systems. And it sounds overcomplicated. But in the case of a small landlord just getting their feet wet, I always say that business systems are just to-do lists. And KPI is just a list of things that you want to measure or track. What's our occupancy? How long ago was it since we got paid rent? Are we at market rent? Just a couple of things on a piece of paper written with a ballpoint pen that you want to make sure you touch base with your property manager about is a way to keep it really simple. But I want to take you from that point where you were starting to get your feet under you and the confidence, and fast forward a little bit to today, kind of get us from there to where you are today on how you made that transition into multifamily. And I also want to talk a little bit about your slow transition out of your full-time job.
sure. So when I managed this property for the first 2 years, and like I said, I saw the tax benefit from it and then the income potential, it immediately sparked an interest to develop a portfolio of passive income for myself. That way, hey, instead of working a W-2 career until I'm 65, 70, I could create a stream of passive income and I can live off that. And so my goal at the time was I need to go buy X amount of single family homes so I can generate all this passive income. Most people do that, right? And so the problem I had was I didn't have a lot of capital. Again, I'm barely early on in my career. My wife and I had bought our second home, so we didn't have any liquidity that we could go put to work. So I needed to figure out other alternative strategies to build capital. So I tried wholesaling. I did a lot of direct to seller for a little while, and I wasn't getting momentum then. And again, the housing market was still struggling at that time. It really didn't start picking up till a little bit later, but I was just having a hard time getting momentum. And then again, the work and effort that was going into it while I was working my full-time job. And so I really didn't see that as a scalable model. So then I said, okay, what's next? And then that's where I started looking at some non-real estate business ventures. I tried doing a couple of multi-level marketing companies, just making quick sales. I wasn't a salesman by nature, didn't have any sales experience, and I didn't even like the product. So that was just a recipe for disaster. But learned a lot about dealing with rejection, learned a lot about sales, if you'd like. And then I found a fitness franchise, and I spent 3 years pursuing a fitness franchise. And that to me was very interesting and intriguing because I was really big into fitness. I loved the fitness concept, and I figured, hey, I can go own a gym, I can manage a gym, and that could be my source of income. And I can then take that and put it into real estate. I'll make that story very long and short. 3 years of no momentum, no traction, didn't get a single unit open, but it cost me about $120,000 in total. So I lost that. It went down the drain. And my wife still reminds me of that to the day. And I got out of that. I got finished messing around with that. And at this time, real estate was really on the back burner for me during those 3 years. And so coming out of that, I started getting into real estate again. And I said, again, still liquidity was an issue. And I just lost $120,000. And I said, okay, what's the fastest way that I can go build some capital? I said, okay, I'm going to go do some fix and flips. So I started working on some fix and flips, and both of those projects did not go well. I was frustrated because I was there at the property 7 days a week after my shifts on the weekends, being hands-on, doing stuff myself. Lost money on both those deals. And I just was sitting there and I'm like, man, like this is not what I'm reading in the books. This is not like all of the prosperity that everybody talks about when it is real estate investing. And I remember my wife, love her to death. She's amazing. She sat me down and said, you really need to get focused. Like you really need to pick a lane and just stick with it and just do what you need to do to become an expert at it. And it was that moment of time where I was like, she's absolutely right. Like I need to really, if I'm going to make this a business, I need to operate this like a business. Yeah. So that was where I was like, I need to do this with a team and I need to really scale up and scale up quickly. And multifamily, when you look at the fundamentals of multifamily, where instead of going to buy 100 single family homes, I can go buy 100 unit building in one transaction and get a higher ROI on that. That was like, okay, that made more sense to me. So that was where I committed to multifamily in 2019 and started from scratch, started networking, didn't know anybody in the space. And I just really started putting one foot in front of the other, reading as much as I can, podcasting, going to the meetups, meeting people. And then from there, just putting myself in positions where I could start finding opportunity. And that led me to meeting my two partners. That led us to building the infrastructure of Blue Capital. And then we found our first opportunity in early 2021. And then the snowball happened. You closed the first one and then it was like, boom, opportunity. Yes. And that's allowed us to scale. And so what was great about that is as we were scaling and as we started to finally gain that momentum that I'd been longing for, it was becoming more time intensive where I was needing to be more involved. So that way we continue to scale. And so I had to make the decision throughout my career to say, okay, how can I transition out of healthcare in a way that allows me to spend more time on real estate? So I made the decision to go to a part-time position in late 20, I think at 21. And so I can dedicate and focus more hours into my business and such. And yeah, that's how that evolved.
When I heard an interview that Graham Stephan had with Dave Ramsey, which I thought was fascinating because they came together basically as arch nemesis, right? Debt versus no debt. And Dave gave Graham some advice where he said, you really need to start moving out of the single family and into the commercial area because commercial has a higher IR. And Dave Ramsey gets a lot of criticism in our investing community because we do use debt and we do form partnerships. And those are basically the two things that he tells us not to do. But at the same time, when I heard Dave say, get into commercial real estate, get out of single family, commercial has a higher R, it made me realize like I'm going down the correct path here because as much as I agree with Dave Ramsey and disagree with Dave Ramsey, like this is something that I can really get behind and he has a lot more experience than most people do in both of those sectors. So it sounds like you went down that path and figured that out on your own, and yay for the wife to come in and basically get your focus back and get you down a path where you maybe didn't know anything and you had to start over from scratch, but you still had that relevant experience that you could draw on, which is fantastic. So I know that starting into commercial before you have a lot of money, before you have a lot of experience can be very daunting. I did the same path that you did where I got a couple of small rentals. I tried to flip something, but they ended up as rentals. And I knew that if I wanted to do this, I needed 30 to 50 houses. And while I know people who have 50 to 100 single family homes, they basically are running property management companies at that point. And that's not something that I wanted to do. And so I came to the same realization that you did, and that Dave Ramsey basically gave me permission, go after the commercial because it's easier to manage and it has a higher IRR. Now, as an owner operator, though, I have been surprised at how much work it is to operate each property. Now, if I was to add it up, let's say you've got a 50 unit property or 100 unit property. If I was to add up the time I spend managing a 50 unit, that I would be managing 25 to 50 single family houses. It's still less overall per unit, but at the same time, it is really time consuming. So I want to hear from you how that time management has been working and how you were able to balance that by stepping down from your job to free up more time to be an owner operator while still being able to pay the bills and keep the lights on. Because that's most people's concern. How do you take care of the short term? Things like groceries, mortgage, lights, gas, insurance, and health insurance. How do you solve those issues and still have the time to basically be a hands on manager for these large properties?
So before we jump into that, let's really highlight what we're discussing here, because this is the reality of being a real estate investor. You are buying and operating a business, right? Especially when you go into the commercial real estate space, you're buying and operating small businesses. And I don't think that there's enough books that articulate that well enough. People, when they think about real estate investing, oh, I'm going to go buy this home and I'm going to cash flow and I'm whatever. And although on paper it sounds great, if you're buying into a small business and you're operating a small business, it is labor intensive, it is time intensive. So I tell people there's really nothing passive about real estate investing if you're looking to be an active investor. So the first thing that people need to recognize very quickly is, do you want to be an active investor or do you want to be a passive investor? And so what does that mean? An active investor is the one that's going out there, finding the deals, building out the network, finding the money, and putting these deals together and building a portfolio. And it is very time intensive to do that. You're being very hands on. And that is something that I wanted to do, because for me, the goal out of this endeavor was to get out of my W-2. I didn't want to be in healthcare until I'm 65, 70. So for me, this was a path to do that. But there's plenty of people in the medical profession, particularly doctors, for example, that love the idea of real estate investing. But to your point, how do they have the time? I spent 30, 40 hours a week plus going out there and operating on my real estate business around my part-time job. And so for physicians, for example, they don't have 30, 40 hours to allocate to go do that. So it's one of those questions you need to ask yourself. There is opportunities to be a passive investor if you're willing to let somebody else own and operate and control the property on your behalf, right? So you can take your capital, you could put it in somebody else's deal, let them operate, let them deal with the headaches, and then you just take your dividends and your shares of that and such. So I think that's the first thing, is people need to understand that getting involved in real estate, there's nothing passive about it unless you do truly want to be a passive investor. Now, for me, again, I only work 2 days a week. I only work 20 hours a week on my part-time schedule. So that frees up my time throughout the remainder of the week. So I have our roles and responsibilities within our team that's divvied up. And then my calendar is divided up in such that way my time is being very efficient and streamlined on the certain roles and responsibilities that I play within our team. But yeah, like I said, it's a 40-hour commitment each week, and it requires you to be very hands-on if you want to be successful. So people need to recognize that and be transparent about that, and really understand it's really important. We talk about the why, right? Like, why do you want to get in real estate? It's very important for people to really understand what is their motivating factor into getting into multifamily. And it can't just be about, oh, I want to make $100,000 a year. No, there really has to be something that really drives you and compels you. Maybe it's a physician that's looking to diversify their risk outside of the stock market because they're tired of the volatility. Maybe it's that single mom who just, hey, I'm working my tail off. I need some other type of passive income to relieve the burden that I have on our family, or something like that. It just needs to be something that really motivates you and gets you going before you just jump into this.
That is a really great point, because the first question you have to ask, do you have more time or do you have more money? Do you want to be an active investor or do you want to collect money in your mailbox? And so when you go through that process, that checklist of saying, how do I want to get involved in this? For me, the answer was to be an active investor for a time so that I could build up a big enough nest egg that I could start then investing my money into other people's projects and being more passive. And so I just knew the size of the nest egg that I needed. And that was how I figured out, okay, how am I going to get that bigger, faster? And that the answer to that was to basically become a real estate entrepreneur. And I'm very careful to say I'm a real estate business owner, and I'm only a real estate investor when my money is working. When I'm working, I'm an entrepreneur. And it's really important to draw that distinction, as you said, and to figure out which side of that do you want to be on. If you can work for the next, say, 5 years as a doctor, a real estate entrepreneur, nurse, and be able to get that nest egg up to the size that you need, just keep working, get that nest egg to the right size. The question is, what are you going to do for that income. And the balance that you've chosen to be an owner operator, active side of a multifamily and as a part-time nurse really means that you are able to enjoy the short-term paycheck. You go to work, they send you a paycheck. Whereas with multifamily, it's a little bit more of a long game where you have to stabilize the property, finish fixing everything up before it really starts cash flowing well. And so you're able to take care of your short term, your midterm by being an active operator, and then your long term as you get more capital that you can start to move over more into the passive side because we all got to retire eventually. It's just what age, right? Yeah, that's a great story. And I think it's really unique to the healthcare provider because we have a lot of healthcare people in our family and our network. And that's one unique thing I found about my investors who are surgeons or emergency room doctors or whatever, they have the ability to move down to 50%. I remember when I was a teenager right out of high school, I was a nanny for a pair of physicians, and they would talk about 90% and 50% and things like this all the time, where when she was on maternity leave and she'd come back at 50%, and now that she had little kids, she was back, but she was only 90%. And I was thinking, wait a second, what does that mean? Like my dad worked full time and my husband in the IT industry worked full time. In fact, when he decided he was ready to quit his job, he started looking for some part-time IT work at a high professional level, and he started looking for part-time consulting, but everything was full-time, full-time. He really had to go from a full-time W-2 9 to 5er to nothing other than maybe some side hustles mowing lawns. It was just very difficult to find anything part-time. But in healthcare, it's so unique because it's in such demand that you really can cut back. And I think that freedom is what makes healthcare providers such great investors. So can you speak a little bit more about those opportunities?
Yeah, you're absolutely right. Healthcare is an industry that is always in high demand and it's always short staffed, no matter what position or what discipline you're in. Physicians, nurses, respiratory therapists, I can go down the list. There's always demand for good personnel. So in the healthcare industry, when it is somebody that's considering their schedule, there are a lot of opportunities and flexibility for people to say, hey, I only want to work on a part-time basis or as needed basis. And as an organization, they're going to gladly take that over not having you all together because it's so hard to fill those positions. And for me, the other reality of this too is take the real estate out of it for just a minute. Healthcare workers are inundated with the stress of their day-to-day jobs, right? And the amount of time and effort that goes into not only their education, but their careers. And then the amount of emotional and physical investment that goes into taking care of the sick every single day in and day out, especially if you work in a hospital setting, which I've done my entire 14 and a half career. And I worked at the highest level of intensity in my career, working for the sickest of the sick. That's great. I fundamentally believe that people in healthcare are there because they want to be there, because they have a heart to help other people, but they reach a breaking point where they're physically and emotionally burnt out. And if you look at the statistics that show, especially post-COVID, the burnout rate for healthcare personnel is extremely high. It's above 65, 69% burnout rate of people that are in the industry. And then you have people that have health elements. The amount of health, mental health and physical health elements that occur in the healthcare industry, it's a real problem. So yeah, people will work 40, 50 years in healthcare, but man, they have such a hard physical time when they're done because their bodies are shot, their backs are broken essentially, and their joints are tore up, and there's not a quality of life there at the end. And so you see a lot of people looking for a more flexible and alternative schedule because they don't want to be in those positions. I mean, we've seen it. I've worked with people working for 40 years, and now, not to say that they're disabled, they just don't have that quality of life like you hope you have when you're getting ready for retirement. And so I think people recognize that and now and are really putting themselves in there as a priority first over their careers. But then the challenge comes with that, man, if you're used to working 40 hours a week at a particular salary and you go and you cut that in half, that's a huge hit to your household income. And if you have a family like I do, I've got a wife and 3 kids, going down from full-time to part-time, my salary was cut in half. So how do you make that difference up? That's the power of having a portfolio of passive income that can help supplement that income. And that's the goal, is right, to eventually build enough passive income to where you can really work at your own leisure. My wife, love her to death. She doesn't want to quit her job. She loves what she does. So she's like, hey, even if we got to whatever financial milestone, she's going to always be a W-2 employee. And that's great. But it's nice when you work because you want to, not because you have to. And that's the power I think that having a real estate portfolio offers you, is to give you that flexibility. And for me, when I think about what is most important to me and why am I going down this journey, for me, it's all about time control. I want to be able to control my own time. Forget the money. Like, that is what it is. I want to be able to control my schedule and my time in the way that I want to. And I would argue that most people listening to this probably would relate to that.
Yeah, money is the tool that allows for you to control the time. If the
Absolutely.
money isn't the object, if you're after time freedom, then no amount of fancy houses or fancy cars are going to bring that to you. But it's about being able to control your time. And so, well, before we move on to your own passive income goals and your own passive income journey, I think what you touched on with time is really relevant, because we are speaking to ourselves, entrepreneurs, healthcare professionals who don't have a lot of time. We have kids, we have personal lives, we have a lot going on. And investing a little bit of time up front to be able to learn what needs to be learned so that someone can make decisive investments into passive income opportunities by placing their capital in, or taking even more time to learn to become an entrepreneur and maybe make a career shift like you did. How do you counsel people who are always saying, I ought to get into real estate, I ought to get into real estate, but they just are never able to take the time to get to that comfort level of taking that first step?
Well, again, I think it goes back to figuring out what you're like. Everybody, okay, you hear people say, oh, I want to get in real estate, I want to get in real estate. But the question I would ask is why? What is it? What is it about real estate that has you compelled to want to take that on? And again, what is the motivating factor for you? Is it to supplement your income so you can have a more flexible lifestyle? Is it because you need other income to provide for charities or your family or whatever the case may be? So you have to really figure out what is your pain point and then build an investing identity off of that. Some people, like I said, they would rather just diversify their portfolio and mitigate their risk. So they don't want all of their eggs in one basket in the stock market, for example. So real estate might be a good alternative. So that's a completely different story than somebody who's tired of working the 9 to 5 and was putting in more than that even and just barely getting by. So I would encourage people to really just, again, figure out that motivating pain point and to why, and then build an investing thesis around that and really make a decision on how committed are you? Like you said earlier, are you somebody that has time and no money? Or are you somebody that has money and no time? Really figure out that plan. But we live in a great digital age now where there's so much free information out there and good information out there that's easily accessible. The podcast medium, like we're doing now, is one of my favorite mediums. Come on, if you live in Houston, for example, like I do, everywhere you go is a 40-minute trip one way. You can get a lot of education time in the car listening to podcasts or ebooks or things like that. So I would tell people, take your time, soak up and absorb as much education as you can through mediums like this, and then just to begin to formulate your investing thesis.
It's all about time management and about what's really important. Spoken like a true healthcare provider. If we're going to put this in a healthcare analogy, you present to the doctor at the clinic and you tell the nurse, what's the matter? This is my pain. I'm having a pain point. There's something wrong with me. And then we proceed to go through, figure out what that is, and come up with the best diagnosis and the solution. So it's a great way to just say, if you know why you want to do this and you really are feeling the pain of this pain point, and those can be the same thing or they can be two different things, but really getting deep down and understanding that helps a lot. And it helps you to be able to make that commitment. And for me, when I read Rich Dad, Poor Dad, it was maybe 2000, 2001. And I was already using the words residual income and trying to figure out how to get into real estate, how to basically level out of the life that we had or level up from the life that we had. And I didn't find Rich Dad, Poor Dad to be very insightful. People would talk about how earth-shattering it was, and I hear that a lot, like what you said. But what I walked away from that was, I'm not really fired up because I don't know what to do. I know that was a thing. I already knew that was a thing. I don't know where I figured it out. Maybe I knew some investors or something. I don't know where that idea came from originally, but it came down to, now what? Now what do I do? And so I know that we have some education that we put out to help investors figure out where to get started. So can you tell us a little bit more about how people can get a hold of you, why they should reach out to you, and then we'll end up talking about your own passive income adventure?
Sure. Let's start with why people should reach out with me, because I know what it feels like to be in the trenches and giving all of your time and effort to a career and wondering what the end result is going to be. I mentioned to you in 2008, when I started my career, I watched people that were working for 30, 40 years getting close to retirement who had all of their retirement assets wiped out because of the great financial crisis. And they were in a panic because they were no longer going to be able to retire in the way that they hoped for. And so they were going to have to work several more years to make up those losses during the financial crisis. And when you think about risk, come on, what is a bigger gamble than just putting in money in a 401k for 40, 50 years, hoping that when you get ready to retire, the market is going to be there to support that? That did not make a lot of sense to me. So I know what it is to see firsthand how risky just relying on a Fidelity or a financial advisor that just takes your money and puts in a 401k. I know what that looks like. And I understand what it means to have that pain point where you feel like the W-2 career is just not the right exit for you, right? There's more to life than just working for 40, 50 years. And I'm doing this for my family, for the time control. I want my time freedom back. And that's why I'm in this. And being a healthcare worker, I understand what the pain points are and the burnout is when it comes to giving all of our time, emotions, and efforts, physical capabilities into providing for others, but we forget to take care of ourselves. And so that to me is one thing that I'm very sensitive to, and I want to help others is put yourself first and take care of yourself first, and just like you would other people. And I think that's important. Now, how people can get a hold of me, if people want to if they want to get a hold of me, I want people to go to iTunes, whatever other streaming service that you're listening to this podcast on, make sure to leave Emma a rating and review. And if you take a screenshot and text it to 832-743-1400, I will personally reach out to you and schedule a free 30-minute coaching call with you.
That is amazing. And that's the first time I've ever heard anybody say that. So thank you. It's basically like giving forward, paying back, oh, that's awesome. Yes, please rate and review, and you can have a free consultation, a discovery call to figure out how to get started. Because I know that it's overwhelming and it can be daunting because we've both been there. And I want to say, especially in your wife's case, the point that you made about the W-2 worker, it's going to be great for her to have the mental security to know that if she ever does get burned out, if she does want to have another baby, if she gets injured or disabled in some way, that she can either quit or cut back and not have to worry about where the next paycheck is coming from. So even if she is deciding to work, she doesn't have to make that decision for the rest of her life. She now has the freedom and the security to eventually be able to make a different decision, because we're all evolving all of the time. And that's the real freedom of what it is that you're doing for your family.
Yeah, absolutely. Everybody goes to work because they have to. And that's the biggest stress and burden that most people have is, am I working enough to provide for my family? But imagine the freedom that you have if you can just work because you want to be there, but not because you're relying on it. You would have such a better appreciation for your job and what you do than you can ever imagine. So it's that time freedom is everything. Time is our most valuable currency, and we're all running out of it, whether we want to admit it or not. So it's best to maximize that time that we do have and spend it in the ways that you want to.
And I know that my husband was in some powerful denial about that, because when he realized that he could quit his job, suddenly he started hating his job. But before that, I was like, I love my job. We're doing some really great work in the healthcare data science field and patient data aggregation and really changing people's lives. And he felt proud of that. We saw that in our own lives when my dad was in the hospital and in skilled nursing facilities, that change of information back and forth using the software that he was helping to develop. It was a powerful it was a powerful experience for him and a powerful motivator. But the minute I said, yeah, I think we're about ready, he was like, oh, when can I quit? When am I done with this? Oh, I'm getting so tired of this. It was a completely different story. And I think at a certain point, you have to tell yourself that what you're doing is useful and meaningful and valuable. But he got burned out and he had the freedom to get burned out. So that's where we are now. So what's your website address if people want to go and find you through that venue, even though I do prefer that they leave a review and send you a text?
Yes, please do that first. But you can visit us at www.blueoakinvest.com. You get a little bit more insight to myself, my two partners, and what we do at Blue Oak Capital. And then you can also reach out to me that way. And we have a lot of great resources that we can share with those who are looking to learn more about investing in commercial real estate.
Awesome. Thank you. And the final question that I ask everybody is tell me about your next passive income adventure, whether it's personal or whether it's a business goal, but just something that you wouldn't be able to do if you were just still a 9 to 5, something that frees you up to do some sort of bucket list item.
So my next big goal, it's a personal goal, but I owe my wife a trip to Europe that I promised her over 12 years ago. We will schedule a time to go on about a 3-week tour to Europe here in the very near future. And I'm looking very forward to that. And I think that has all come by way of just all this time and effort that we've put in and to the business, and looking really forward to that.
That is beautiful. I know for me, I've spent a lot of time in Europe over the years, and it is a big bucket list item to get back. In fact, I've even got like my little picture here of the beach that I want to live on when we finally get over there. And I see also, just real quickly, I see you have some maybe vision board things in your background as well for those of you who are watching this on YouTube.
Yeah, if anybody sees this, these are actually our portfolio. These are all the properties that we are owning and operating right now, and we've partnered in. And this is helping to provide that income so I can take my wife on that nice, beautiful trip to Europe. And look, and this goes back to what we were talking about earlier. I encourage every investor, don't limit yourself and don't limit your mindset to thinking small. You don't have to start in single family to get started in real estate. Our very first partnership was this deal right here. It's a 240 unit apartment building in commercial real estate, our very first one. And since then, the largest one's a 396 right here over my shoulder here. Don't limit yourself to thinking small. Go big, go faster, and just partner with the right people. Opportunities are endless.
That's amazing. Like your origin story, like your Superman origin story, how you went from being basically just like the rest of us to owning hundreds, I don't know, what are you up to? 1,000+ units at this point as owner
Almost
operator?
800, we call it 850 units, right at.
850, getting pretty close there. It can be done. Whether you want to be a
Yes.
passive investor, an active investor, reach out. We will help you figure out which path is best for you based on what we would do if we were in your situation, and just help you start to get some traction on your own passive income adventure. So thank you so much, Cody, for joining us today, sharing your insights and your experience and your background. I think there are a lot of people out there who are going to relate to you, and I encourage you to reach out after the show to both Cody and me. We want to be in your network. We want you to be in our network. And until next time, we will get back together and talk about your next passive income adventure. Thank you. Another great interview with a guest who has been there, done that, down in the trenches, just like regular, real people. Cody made a comment to me after the show that it's not just guys with suits going out to these buildings who are owning and operating and investing in these buildings. It's just regular guys in branded polos and work boots. It's so important that we find role models doing what we want to be doing, who are relatable, who understand where we are because they've been there. Cody definitely delivered on that today, and I hope you enjoyed it as much as I did. Remember to reach out to Cody after the show. Again, we want to be in your network and we want you to be in our network. Also, be sure to reach out for a free call with me at www.highrise.group/contact. You can attend one of our weekly meetings. We have a networking meeting as well as a weekly investing club meeting where we just look at deals and see if we can find something that we are interested in investing in together and negotiate for better terms. Check out our investing offerings at our website as well to see what opportunities are currently available for you to participate in, either as a joint venture or a limited partner, depending on what your investing goals are. Thank you for joining us today, Passive Income Adventure, and we will see you next time.